On a Tuesday evening in November 2025, while most of the world was worrying about rising interest rates and a cooling housing market, a small room in Manhattan was operating under a different set of physics. The gavel came down at one of the world's leading, oldest and largest fine art brokers, Sotheby's, for a staggering $236.4 million. The item? A single canvas by Gustav Klimt. Now, to the casual observer, this looks like a sign of extreme wealth, a celebration of human creativity. But to economic historians, this number is terrifying. Because throughout the last century, record-breaking art sales haven't just been about art. They have served as the ultimate canary in the coal mine. History shows us a haunting pattern. Every time the ultra-wealthy scramble to dump record-breaking sums into trophy assets, a global economic reset is usually less than 12 months away. From the Hearst peak of 2008 to the Japanese Impressionist bubble of 1990, the art market speaks when the stock market is about to scream. Today, we are looking at the class of 2025. We're going to look at why the record sales of Klimt, Kahlo, and Rothko last year weren't just auctions. They were a massive, coordinated flight to safety. Welcome to Compass. To understand the warning, we have to look at how weird the year 2025 actually was. In the spring, specifically May 2025, the art market looked like it was dying. We saw a 43% drop in total auction volume. Major houses like Christie's and Phillips were seeing buy-ins. That's when an artwork fails to meet its minimum price and is pulled from the stage. It was a ghost town. But then, something shifted in the final quarter of the year. By November, the middle of the market was still frozen, but the top, the ultra-rare masterpieces, went vertical. We saw Frida Kahlo's El Sueño shatter records for women artists at $54.7 million. We saw Mark Rothko's number 31 hit $62 million. Why the sudden desperation? In the Compass theory of economics, we call this the funnel effect. When the elite lose faith in paper assets, stocks, bonds, and even some currencies, they stop buying good art and start fighting over immortal art. Think about it. If you have $100 million in a bank during a systemic crisis, that money is a liability. It's subject to inflation, bank freezes, or market crashes. But if you turn that $100 million into a Klimt, you now own a hard asset. It is portable, it is globally recognized, and its value isn't tied to a central bank. In late 2025, the elite weren't collecting, they were sheltering. Is this just a coincidence? Let's look at the receipts. Take September 15th, 2008. While the rest of the world was watching the news in horror as Lehman Brothers filed for bankruptcy, marking the start of the Great Recession, Damien Hirst was at Sotheby's in London. He sold $198 million worth of art in a single night. It was a record for a single artist auction. The market was literally crashing while the records were being set. Go back further to 1990. Japanese billionaires were spending hundreds of millions on Van Goghs and Renoir. They set records that seemed insane at the time. Months later, the Japanese asset bubble burst, leading to the lost decade. Why does this happen? Because art is a lagging indicator. The smartest money in the room usually sees the crash coming before the general public does. They exit the stock market while it's still high and move that liquidity into masterpiece hedges. By the time you see the record price on the evening news, the exit has already happened. The record-breaking sales of 2025 suggest the exit doors are currently being crowded. To understand the true intent of these buyers, we have to look at the Leonard Lauder sale in November 2025. This wasn't just a normal auction, it was a white glove event, meaning every single lot sold. It brought in over $527 million in one night. Why is this significant? Because Leonard Lauder represents the old guard of wealth. When his collection hit the market just as global trade barriers and tariffs were beginning to squeeze corporate margins in late 2025. The elite didn't hesitate. They saw an opportunity to move liquid cash, which was losing value to 5% inflation, into immortal assets. Think about the mechanics of a crisis. If a country's currency devalues by 30%, your bank account shrinks by 30%. But a Klimt? A Klimt is a global currency. It can be sold in London, Hong Kong, or New York. It can be stored in a free port. Those high-security, tax-free warehouses in Switzerland or Delaware, effectively removing that wealth from the traditional banking system. In 2025, we saw the ultra-high-end segment, works over $10 million, jump by nearly 40% in value, while the rest of the market remained stagnant. This is wealth concentration in its purest form. The billionaires weren't buying art because they loved the colors. They were buying portable life rafts before the flood. So, what does the compass tell us? If we follow the needle, the record-breaking sales of November 2025, the $236 million Klimt, the $55 million Frida Kahlo, the $62 million Rothko, are not signs of a booming economy. They are the sound of the world's wealthiest people cashing out. History has taught us that the art market is a lagging indicator. It represents the last moment of excess before the reality of a recession or a geopolitical shift settles in. In 1929, 1990, and 2008, the gavel of the gods fell just months before the bottom dropped out of the stock market. As we move further into 2026, keep your eye on the trophy assets. If the elite continue to buy immortal masterpieces while the average person struggles with the cost of living, it's a sign that the people with the best information are betting on a systemic reset. The question for you is, in a world where the elite are trading paper for paint, what are you doing to protect your own compass? Thanks for watching. If you found this analysis valuable, make sure to like, comment, and subscribe to stay ahead of the shifts shaping our world. This is Compass. Keep your needle pointed where the world is moving.